Welcome, everyone, to the Full Disclosure Podcast. My mission is to blow the lid off some of the biggest financial secrets hiding in plain sight. I'm your host, John McGregor. Today, we're diving headfirst in the world's economy. No guests, no experts, just me uncovering stories that have and will have a serious impact on your financial future, that have been carefully woven by design into the fabric of our society, very quietly. So buckle up, because I want to share some things that you may not be aware of. Remember, knowledge is power, and together we can stand tall against the forces that seek to hurt us in our financial life, and that's why you're here. Folks, here we go.
If you have concerns about your financial future, let's be honest, the world shapes your wallet. We're taking you behind the scenes to look at what's really happening in the real world. Inform, prepare, and empower. This is the Full Disclosure Podcast with your host, John McGregor.
Before we dive into these stories, don't forget to hit subscribe below, because you do not want to miss out on future episodes. The gloves are off, and I've got to go deep on this stuff and get this information out there. Secondly, I've had a lot of demand for a simple and quick overview of my cash flow and wealth building strategy. So basically, I took that 40-minute masterclass that I often talk about, which is still available, by the way. But I boiled it down to less than 5 minutes, and it's just really a concise explanation of how my cash flow system works. And you can check that out at go.johnmacgregor.net, and that's MacGregor, M-A-C.net. go.johnmcgregor.net. As I said last week, I think it's funny. Someone said, a close friend said, which is spot on. He says, it's a shame for people to not make money online with stocks and options when your 93-year-old father does it so easily. And it is so true. And by the way, as I said before, this is the exact same strategy my 93-year-old father, soon to be 94 in June, uses to make $15,000 to $20,000 per month as a hobby. And he's been doing it for the past 13 years, 93 years old. And I use it very successfully as well. And I will tell you, February was his biggest month. He did over $60,000 just in income. So if you're looking to generate consistent cash flow, I would urge you to check it out. Again, go.johnmcgregor.net. And we're both on an incredible run this year. By the way, I mentioned in that last show last week that Acorns app had a lot of people request the link to that app. That's the app where you round up your purchases on your credit cards or your debit cards, and then you basically invest that loose change into a diversified portfolio of ETFs. It's super cool. I love this thing. And I started mine over a year ago, and I just simply forgot about it. And I just realized I got over $2,200 that I didn't even know I had. I mean, it was just like free money that just landed in my lap. And I always say, if you've got kids, this is a great way to teach them about savings and investing. So if you're interested, type Acorns in the comments and I'll get you that link, and it gives you about $5. Yeah, it gives you $5 just for signing up. All right, so with that, let's get into it. We've got a lot to cover in this short period of time, and so much of what's going on today, I swear, if you would have asked me 3 years ago, could this be happening today? I would have said no way. Absolutely no way could any of this be going on right now, but here we are. I mean, and to be nice, let's call it this financial mismanagement, when really, frankly, let's be honest, it's fraud and corruption. It's so bad and so pervasive everywhere. Frankly, I don't know if we ever get back to normalcy, if we ever do. And I often think about what it will take to change course here and get back to what I said earlier, a sense of normalcy. You know, is it going to require a major collapse of the system? In other words, Armageddon, or a depression, or World War III, or a civil war, or all of the above, to stir people up and wake them up to the reality that these politicians in charge don't give a rip about us at all, and all they care about is power. I don't know what it's going to take. I mean, will it take Social Security checks to not show up in anyone's mailboxes anymore? Pensions wiped out, major food shortages, a complete collapse in the job market? Well, we need something so disruptive that people finally see the light, so we can actually start voting for people that do in fact care, and that they want to make the hard decisions for the good of the country, not for their own benefit to maintain power. In other words, people who don't want to screw the working class, which is happening today. Now, granted, there are a few out there, but sadly, not many. So what I wanted to do today is I wanted to dissect Joe Biden's State of the Union address, because there's so much in there that should scare the living daylights out of you. But before we do that, I want to give a quick update from last week's show on government waste, and it's just getting worse. So our friends in the government, they released a $500 billion spending bill a couple of days ago, thousands of pages that no one ever read, right? They never do. And we just opened it up, and here's what we found. Get this, $850,000 for a bus stop that reads, "Bus Stops Matter." $850,000 for a bus stop that reads "Bus Stops Matter." That was in California. And I thought a bus stop was just something that you sit in, protects you from the sun and when it rains. And I'm pretty sure you could buy a nice shed at Home Depot for $1,000 to do the exact same thing. $850,000 of your money for a bus stop. Then we have $1 million for a solar panel at a jail on an island in the South Pacific. It's a jail that holds 180 people. We've got $113,000 for an internet cafe in Oregon. This is your money, folks, funding this stuff. And this one is unbelievable. $15 million to strap ankle monitors on cows. Yeah, that's right. I'm not making this up. In other words, you spent $15 million to strap ankle monitors on cows. I mean, folks, you should be outraged by this. This is your money. This is why you pay so much money in taxes. All right, so let's get back to Biden's State of the Union address. So Biden has a State of the Union, right? And what a shit show that was. 1 hour. It's basically 1 hour of an old, angry man screaming and yelling at Americans who basically just disagree with his policies. And if there's one takeaway from President Biden's State of the Union speech, it's this. If you were listening closely, brace yourself for another round of tax and spend tactics, topped with a high level of secrecy we haven't seen since the Renaissance era. It's just wash, rinse, and repeat over and over again. I mean, it's hard to believe that in less than 3 decades ago, Democratic President Bill Clinton declared an end of the era of big government. Yet there's Joe Biden in his angry rant. He just proposed a $7.3 trillion budget, which clearly shows us not only a return to substantial, costly, invasive, less efficient government, but he's doubling or even tripling down on it. He coupled this with an increase in taxes by $5.5 trillion over the next 10 years to support this. $5.5 trillion in more taxes. I'm going to get to more of that in just a moment. So yeah, no, it's debatable whether Bernie Sanders, a self-described socialist, could have even imagined such a progressive utopia that he heard from Joe Biden. I mean, this kind of spending is what Bernie Sanders sits at home, in bed, staring at the ceiling, fantasizing about. That's just, I can imagine. Look, folks, highlighting this budget is crucial because it's super important for you to understand the potential implications it has to you, your wallet, your family, this country, if we have 4 more years of this. And if we do, it's over, folks. We don't have a chance. And these are just the facts I'm laying out. So let me just give you a recap of this tax and spend plan that Biden laid out. Again, taxes are going to go up $5.5 trillion over the next 10 years. And in my opinion, that's just the beginning. There will be a $1.6 trillion annual deficit. In other words, they claim that we will be spending $1.6 trillion more than we bring in, which I don't even believe for a second. It's going to be much, much higher than that. I'm going to explain that in a moment. Because if you remember from last week's show where we talked about, we were at $34.5 trillion in total debt. That was 7 days later, and now it's at $34.6 trillion of debt and climbing. And remember how much it's climbing? It's climbing at $1 trillion every 100 days. Let me repeat that. $100 trillion in new debt every single 100 days. And the interest that you and I pay on that debt, it's close to $800 billion per year and rising as we take on more and more debt, which we clearly are when I just told you $100 trillion every 100 days. And the only way to pay for that is by higher deficit spending. So when they say that we're going to spend $1.6 trillion in deficit spending, that's a pipe dream, folks. And all this means is flooding the economy with more and more printed dollars. We're borrowing more, which then devalues our dollar and then ultimately increases the inflation. The point is, do you see the cascading effect that happens when there's no fiscal responsibility whatsoever? It's like a domino effect going off a cliff. So, going back to the speech, he wants to spend a total of $86.6 trillion over the next 10 years. Trillion, folks. And they calculate, this is their estimate, that would leave us with $12.2 trillion in interest expense on that debt over the next decade. Remember, folks, as a country, we only bring in about $4.5 trillion per year. And they're saying that we're looking at $12.2 trillion just in interest on that debt over the next decade. And in a minute, I'm going to explain how that $12.2 trillion in interest expense is a pipe dream and what that number will actually be in the future. It's going to be a lot higher. It's going to be no surprise. And by the way, someone put out the official debt clock showing where the national debt will be in 2028, exactly 4 years from now. It's unbelievable. And for those just listening, just based on the current amount of borrowing, which, as I said, $1 trillion every 100 days, our debt will be at $46.5 trillion in 4 years. $46.5 trillion in just 4 years. Remember, today we're at $34.6 trillion. And in 4 years, it's going to go to $46.5 trillion at the rate we're borrowing. And I don't know if you recall, but I mentioned a while back that the CBO, which is the Congressional Budget Office, and their focus is to provide objective, nonpartisan analysis on budgetary and economic issues. It wasn't too long ago that they came out with their projections of our debt, saying that by 2033, in other words, 10 years from now, our debt would exceed $45.7 trillion. And I know I'm throwing a lot of numbers at you, as I did last week, but it's just so important you understand this. And if you have a time, I would watch this and write it down so you can really understand the grave situation that we're in. So let me say that again. It wasn't too long ago that the CBO came out with their projections of our debt, saying that by 2033, 10 years from now, our debt would exceed $45.7 trillion. But our actual debt clock that I just mentioned in real time is showing we're going to hit $46.5 trillion in just 4 years, not 10, 6 years ahead of what the CBO forecasts. In other words, by 2033, we're going to blow through the CBO's projections. This is a train wreck in real time that we're witnessing firsthand. Okay, so let's take that $46.5 trillion that we're going to see in 4 years and multiply that by a 5% interest rate on that debt, which is about where interest rates are right now. Now we're looking at $2.3 trillion just in interest per year. Remember, as I said earlier, as a country, we take in just over $4.5 trillion in tax revenue. So if we stay on this debt pattern, as the debt clock shows, and by the way, if you have a moment, you should check out that debt clock in real time. And you find it, you go to usdebtclock.org. It's shocking. And by the way, for those of you listening or watching this that are out of the country, you can find your own country's debt clock as well. It's absolutely mind-blowing. Again, usdebtclock.org. So if we stay on this debt path, that means in 4 years, we're looking at $2.3 trillion just in interest, which is about half the amount of income we bring in. And this runaway train is not stopping anytime soon. And by the way, in Biden's speech, was there, if you happen to have seen it, was there ever a moment where he wasn't screaming? I'm sorry, there wasn't a moment. Was there ever a moment that he mentioned any spending cuts or waste reduction? No, not once, nada, goose egg, zilch. Never, ever did he mention cutting costs or waste reduction. So, if you recall from last week, I completely debunked the notion that the rich don't pay their fair share. It's just a flat-out lie. Quickly to recap, here are the facts. The wealthiest 1% of taxpayers pay 19% of all taxes, income taxes collected. Again, 1% are responsible for 19% of income taxes collected. And we can take that a little further. The top 20% pay 80% of all taxes collected. Top 20 are accountable for 80% of all taxes. So, we can put that to rest that the rich do in fact pay their fair share. But of course, here we go again, and this was just so bizarre but predictable. But he knows he can get away with it because he knows most people are misinformed and the mainstream media will just cover for him no matter what he says. Biden came out in his speech and said that these evil billionaires are only paying about 8% in taxes, and then went on to say, quote, "Do you know if we tax these evil billionaires," I added the evil billionaires, "at 25%, that would allow us to get $500 billion over the next 10 years. And then he screamed, "Imagine that!" And here's a fact check. According to IRS data, going back from 2019, the actual average tax rate of the top 1% of taxpayers in America is 25.6%, not 8% as he claimed. I mean, look, he can't even balance a budget, and now he's spending $1 trillion every 100 days, and he thinks by trying to hurt the billionaires, who are actually generating a lot of revenue, a lot of tax revenue, who are creating jobs and creating a lot of wealth for people. He wants to attack these people and, frankly, incentivize them to leave the country, just so he could generate $500 billion over the next 10 years? I mean, $500 billion is a pittance compared to the problems that we have now. That would be a drop in the bucket to solving this problem. I mean, it's absolutely ridiculous. So, take a wild guess what Biden's plan is? Take a wild guess. That's right, hike taxes. But this time he says it's only for folks earning over $400,000. Well, that sounds fair, right? But middle class, heads up, you're still gonna feel the pinch. I mean, it's kind of wild that 40% of Americans don't pay federal income tax at all. And then there's all this talk about making corporations cough up more in taxes, like bumping up the rate from 21 to 28%. That's a 30% jump in that category. Pushing the minimum corporate tax from 15 to 21%. That's a 40% increase. And by the way, let's not kid ourselves. Corporations love their profits, as they should. You jack up their taxes by 30, 40%, and it's the middle class that's going to take the hit, as they always do. Why? Well, first, prices they charge consumers are going to skyrocket even more to account for these higher taxes. And second, companies looking to trim costs might just start cutting jobs, which would then send unemployment rates through the roof. Once again, this will not turn out well for the middle class. So let's talk more about this tax proposal. I mentioned $5.5 trillion in new taxes. It's all going to be spun as if it's just going to tax the wealthy and the big evil corporations. And if you believe that, by the way, you are badly mistaken. As I mentioned, all those higher taxes on the big, ugly, evil rich and those nasty corporations all trickle down to you and I in the form of higher prices. So the narrative sounds like he's looking out for the little guy when, let's be honest, they don't give a damn that we're the ones that get hurt the most. So as he said himself, Biden's really going after more taxes. He's already thrown some new tax stuff with this Inflation Reduction Act, but guess what? He's not satisfied. It's not enough, folks. That Inflation Reduction Act, and by the way, you just have to laugh. You have to laugh at that name, the Inflation Reduction Act. Because whenever you hear these feel-good terms for these massive spending bills, it should be an immediate red flag that goes up. That it's designed to do the exact opposite of what they're trying to sell us. So this Inflation Reduction Act, which has actually led to higher inflation, right, slapped a tiny 1% tax on stock buybacks. But now Biden's like, let's crank it up to 4%. So what's likely to happen? Companies, some may start paying out a dividend, but more likely they're going to be using their cash to buy other companies. And it kind of makes you wonder if Biden's trying to make the big companies even bigger. Then there's this idea to jack up what's called a book minimum tax for the big corporate players from 15 to 21%. And this tax hits the profits companies show off in their financial books, missing out on a bunch of the deductions. And it's not to be confused with this 21% global minimum tax idea, which basically feels like a gift to other countries itching to tax U.S. giants even more. And the takeaway of all this, when new taxes pop up, they hardly ever stick to these starting low rates. That's always the beginning to higher rates in the future. And as I mentioned, Biden wants to hike the corporate rate to 28%, up from 21%. This is critical because you may not remember, but back in 2017, taxes got slashed from 35% to 21% for corporations, which according to Common Sense folks at the National Bureau of Economic Research, they even pointed out that by slashing corporate taxes, that paid for itself by spurring investment, bumping up wages, which led to higher tax revenue. Imagine that. When you incentivize companies with lower taxes, it actually spurs investment, bumps up wages, and increases tax revenues. When Trump lowered that rate to 21%, of course, all the pundits, the media came out and said it's going to crush the economy, or in fact, it's estimated that $1 trillion due to this rate cut, $1 trillion came back into the U.S., leading to a surge of jobs here at home. But bumping that rate up to 28%, I guarantee you it's going to backfire right on schedule, which will likely lead to a less investment, lower wages, and lower tax revenues. I mean, think about this. Higher corporate taxes doesn't exactly scream invest in the U.S., which is exactly why the Republicans cut those rates in the first place. And just for kicks, by the way, do you know China's corporate tax rate sits at 25%, which is less than what Biden proposes ours to be? But no worries. Biden assures us that he's all for capitalism and isn't trying to be anti-business. Right. And speaking of that, if you add it all up, not only will our taxes be higher than China, but they'll also be higher than Russia and the European Union on average. Talk about anti-competitive. It's unbelievable. Now, check this one out. Another thing he wants to do, and this is what the Wall Street Journal referred to as whack-a-bank, the junk fee rules. Sounds great, right? Biden vowed in the State of the Union speech to banish bank and credit card junk fees. It's a nice sounding talking point to kind of stir up his voters, right? So last week, the Consumer Financial Protection Bureau finalized a rule effectively capping credit card late fees at $8, which is about 75% less than the typical past due charge. And that'll make a great campaign commercial for the uninformed. But let's get into it. Oh, and let's not forget the hefty penalties the government imposes on us for filing our taxes late, right? Or late fees on parking tickets or car registrations. No, those aren't junk fees at all. Those are perfectly acceptable. But a bank imposing a $25 late fee for someone who's not paying their credit card bill on time, that's prohibitive. That should be illegal. That should be capped. But being late on your taxes? Oh, no. You could possibly go to jail for that. But for all of you listening, thinking, well, these caps on these credit card late payments, hey, this is great. But just wait. What we're going to see is credit costs increase, access to credit decline. Very likely, credit card reward programs disappear or severely downgraded. Remember what the great economist Thomas Sowell said. He says, even though it may feel or sound good, you have to ask yourself, does it do good? That second part is where so many people go wrong. And even the Consumer Bureau acknowledged these lower penalty fees will incentivize more borrowers to pay late, right? I mean, it makes sense. It's human nature. And as a result, they'll incur higher interest charges, more penalty fees, their credit score will drop, and the loss of any grace periods will ever exist, which will likely mean, in the end, people's access to credit will be difficult, if not canceled. And all of this will make it harder to qualify for loans, such as auto and mortgage loans in the future. And by the way, credit card late payments are at the highest in over 10 years, and even credit card companies are getting even more stingy to credit to avoid these losses. And this new policy will just make those late payments even worse and even higher. By the way, also, with this new rule in play, more folks may end up leaning towards pricier options like payday loans to make ends meet. And you know those stores that have their own credit cards, like Macy's or Nordstrom's or, Staples has them? They're going to feel this too. Because late fees can be a big chunk of their credit card revenue, ranging anywhere from 14 to 30% for a business that offers a credit card. And with this new cap on these fees in place, they're going to have to figure out some way to make up for that lost revenue, which I guarantee you will be higher prices on the products and services we buy. So again, going back, do you see how these policies have consequences no matter how good they may sound? Do you see how these politicians try to spin this nonsense and make it sound as though they're doing this for our own good? When in fact, all they're doing is trying to buy our vote for perpetual control of our life. There's always a hidden personal agenda when you hear these feel-good policies. Now, let's throw some kerosene on this dumpster fire and get this one. That same Consumer Bureau threw out a suggestion back in January to put a cap on bank overdraft fees, bringing them down to as low as $3. And banks usually charge these fees for overdraft protection as sort of kind of a buffer for customers, helping them dodge penalties for not paying on time. So, what do you think the banks are going to do? Well, of course, they're just going to find another way to raise other charges on their consumers, on you and me as bank customers. And look, by the way, in recent years, the biggest banks have basically eliminated or reduced these overdraft fees to compete with other fintech firms. So these fees have already dropped considerably, if not been eliminated altogether. That's what competition in the marketplace is all about, and what competition is designed to do. But the government, again, and these politicians love to confuse activity with accomplishment so that they can have their talking point at the next campaign rally. So what's really going down is that the government's just basically playing a whack-a-mole with banks targeting regular business practices and basically turning these banks and other organizations into a super controlled government utility. That's basically what it is. And who ends up getting the short end of the stick? Yep, it's us. It's the consumers. More so, it's the lower and middle income individuals. You know, it's like every time there's a new rule to cap fees or whatever, we end up paying the price one way or the other, just like with other kinds of price limits that we've seen before. And by the way, here's one more that I want to share. So Biden was out there in a speech claiming that buying a home is going to get more affordable. And he was talking about how mortgage rates are going to drop. And then he whips out this new government freebie that's supposed to help first-time buyers buy a home. Smell a rat? Absolutely, as you should. And here comes the universal basic income Trojan horse for home buyers. Biden wants to hand out $5,000 a year for 2 years for first-time home buyers. This is kind of like the government chipping in $415 every month towards their mortgage. But here's the kicker. One thing he didn't mention in his speech is that the average mortgage payment has shot up by more than $1,100 a month for an average price home. So even with this extra $400 in cash he's throwing out, folks are still way underwater. When Joe stepped into the White House, you could get a 30-year mortgage for a new house at about 2.8%. Fast forward to now, that rate hit the roof at 7.8%, settling around 6.9% today. That means the average monthly payment on a mortgage for an average price house has jumped from around $1,500 per month to more than $2,600. So here's an idea. How about actually solving this problem rather than just throwing money at it as they always do? How about implementing policies that bring down interest rates? We have a massive housing shortage, which is one key reason housing prices are so high. So how about stimulating the supply of new homes by streamlining the permit and building process for new homes? How about we cut back on these ridiculous environmental rules that restrict new construction and new development? How about cutting back on these high costs for home developers so we can actually start building more homes, thus lowering the cost of home ownership? You know, today it takes years for a home developer to get approval to buy a new or to build a new home development project. Not to mention the thousands of dollars that developers have to pay to get approved. No, instead, let's just send everybody free money and get them even more addicted to government, because that's ultimately the plan to begin with. I mean, it looks like this whole American dream of owning a home is just taking another massive hit with no real solutions in sight. And all of this ties to inflation, which is not slowing down, and in my opinion, won't slow down anytime soon. And right now it stands that Americans are now paying $9,900 more than they were 3 years ago for the things they need to live on. And the latest inflation report just came out, says it's getting worse, as we predicted on this show. This is the second straight month of stronger than expected inflation. And of course, the burden disproportionately affects low and middle income Americans who's already stretched their paychecks, and they're heavily affected by price fluctuations. Housing, gasoline were the biggest drivers of inflation last month, accounting to more than 60% of the total monthly increase. And younger generations, they're currently paying their fair share in the economy, and they're mitigating by using credit cards to purchase the essential goods they need to live on. And now we're seeing a huge rise in buy now, pay later, right? An article in the Wall Street Journal on March 12th was titled, "We Still Don't Believe How Much Things Cost." And the first story was about deodorant, where a guy in the article mentioned that he was normally paying $4 for a stick of Old Spice deodorant, which he is now paying $7.99 for it. And by the way, I saw this exact same thing at CVS. In fact, where I live, that same stick of deodorant was well over $7.99. It was around $8.40 for that exact same stick of deodorant. And just get to the list of everyday items going back 3 years. Baby wipes were $4.25, and now it's $6.64 on average. That's a 56% increase. Bleach has gone from $2.78 to $4.87, basically a 100% increase. Cooking oil, $5.22 to $8.04. Dog food, I used to pay $60 for a huge bag of dog food. Now it's almost $90. Paper towels, $5.76 3 years ago. Today, $8.22. Even raw men, for those college students, is getting expensive, going from 62 cents a pack to 108. Dry cleaning has now tripled. And since February of 2023, frozen drinks up 27%. Car insurance is up 26%. Oh, and by the way, I've got a mind-blowing story on that next week. Your car may be spying on you and ratting you out to your insurance company. So stay tuned for that one. It's unbelievable. Sports tickets are 11%, clothing 11%, baby formula 8.8%. And remember, those last statistics were just from a year ago. And if you look at this chart, it shows that it's been 30 years since the cost of food has eaten up this much of your income. And you'll see the chart, but for those that are just listening, 30 years since food ate up this much of your income. So all this leads to the question is whether or not the Fed can lower interest rates as Jerome Powell promised that they would a couple of months ago. Because everyone's hoping we get to a point where the Fed has to lower rates to stimulate growth in the economy, lower the cost of interest on loans, lower the cost of things we buy, and further the rise in the stock market. But here's my prediction. Mark it here, folks. March 18th, 2024. That no matter where inflation is from now until the end of the year, or I should say now until the elections, even if inflation creeps higher, the Fed will lower interest rates, I'd say, right around August or September. Why? Well, it's to stimulate the economy and the stock market to help Biden's chances of winning in November. Remember, the Fed is very political, and Jerome Powell, who heads up the Fed, wants to keep his job for another 4 years, so he's got to make this economy look good so he makes his boss look good. So America be damned, he's got to figure out a way to lower those rates no matter what's happening with inflation. So, folks, that was a lot of information, a lot of numbers. Let's wrap it up there. I just hope you're starting to see this theme that in this show that how policies have consequences no matter how good they feel and sound. But these consequences can ravage everything in its path and sometimes become irreversible. So again, the next time you hear one of these wonderful sounding programs, you've got to ask yourself, does this just feel good or will it do good? A huge, huge distinction that'll help guide you to the right decision. All right, so that's a wrap, folks. Hope you enjoyed the show. Again, hit subscribe and would love to hear your comments. Don't forget, I've got that brief overview of my cash flow and wealth building system at go.johnmcgregor.net. That's go.johnmcgregor.net. And we'll see you next week. Aloha. Take care.
Thanks for listening and supporting Full Disclosure. If you like this episode, remember to like and subscribe and follow Full Disclosure. To make a better financial plan for your future, join our Cash Flow Bootcamp, where John shows you a safe and smart way to turn your investments into a steady income stream in a fraction of your time. Learn to make money in any market. Until next time.
This podcast is a presentation of Rich Dad Media Network.